We're looking at the best momentum companies on the ASX over the last quarter. And then we also want to know where they come from, what breeding ground, what generates these best momentum leaders. That's where we look at the Launchpad. Gary's been through both lists of 30 leaders from each. And is here to dissect the charts, tell us the opportunities, the trends, and the lessons that he's getting from the market. And we also share this list at the same time Gary gets it on Thursday afternoon with the YouTube members. Welcome to the newest members, and we thank you very much for your support. When they get the list, they also get the opportunity to throw the hat in the ring and say, hey, you have a look at this chart, or what about this one? So when we go through the list, we've also got a few of the requests from the members to say, can we have a look at these ones? Quite often they do actually overlap with what Gary's looking at anyway. Nonetheless, these are the leaders from the 30-30 list and the best charts to come from it. Good morning, Gary. How are you?
Good, Chris.
We've got the market, we've got the Fed rates movement, we've got a bit of volatility there. You have been talking for a couple of weeks about the rotation that can happen within the Aussie. And we do have those perennial leaders that we looked at last week, and we're going to share the model book next week, where you've just looked at those market leaders that just go from bottom left to top right and keep climbing. They were obviously star performers on the momentum list. What have you seen in this week's momentum list when we look at the ASX for the best 30?
What I was saying, it's probably a mixed bag in the momentum ranking there. We're seeing a few medals in the weekly list as well, which we sort of saw last week. So we did sort of hint that we wanted to see a few more energy, sort of lithium,
a continuation of that theme going.
Yeah. We want to sort of see some strength there in those sectors. They don't want to be just a 1 week sort of flash in the pan. You want to see 2 or 3 weeks of continued strength there. That'll give us a little bit more conviction that those names are going to, not just have a little bit of a dead cat here, but have something a bit more meaningful. But yeah, I guess in the quality momentum there, to be honest, we saw just the names sort of been running here. Just continue to keep running. Really, that's probably the number one thing, which has pretty much been the theme for most of the year. But as I sort of highlighted last week, don't keep your, don't stop looking at the quality momentum there, because those names do sort of set up over and over again. I guess probably Appen is one that's been really strong here, but it hasn't really given you great setups there. Like if you look at that rally there out of the February low, there was a little bit of tightening pattern in there, and then maybe a little B-wave break there. But other than that, it didn't give you too many. So there was a little tight little setup in here, but not much. But you really, like in Elliott wave terms there, Chris, you've sort of got like a little 3-wave rally here. So it hasn't really been like the classic sort of, I know you can find a 5-wave fall in there, but it's not a lot of days in there. It's not, one sort of corrected, one different fall, so it's really just been a pretty, sharp up and down here. And this to be honest, this leg here has had one consolidation as well in here. So maybe this is going to be like this leg here, be basically like a little 3-leg, ABC sort of up here. So I don't know. It's but it definitely hasn't given you too much consolidation. It hasn't given you any consolidation patterns here. It's just really straight up here. What's really enthralling here is the volume. So big volumes there. So that tells you, what you've got to keep an eye on the stock here, because this has a stock here. It's gone from 40 cents there up to $1.90 there. So it's gone up 400, what's that? 400 or 500% sort of. So that's good, because when this consolidates and has a bit of a breather, it's got the potential to have another big move down the track here if things keep sort of rolling on. But hard to chase this here. It's had a big move here. Looking probably, I'd probably measure that way about there, 40 to 150 there, so $1.10. So add $1.10 onto 90, that's giving you around $2 there. It's probably just a bit of a measurement rule, that you might use there. If I measure that move from, where is it? Say 30 cents up to 65 there, so 35 cents. Add that on to 55 there, so they're getting, it's probably on a bit further there. Did I measure that right? Maybe 25 to 40 cents. 40 on 55 to 95, so it sort of shot that out. So I know, just that these are things just to keep an eye on. It's had a pretty cracking run here. So yeah, but you prefer to sort of see some sort of formation sort of set up there and give you, I mean, pros aren't just going to trade momentum there willy-nilly. They're going to wait for a strong move, wait for a consolidation. As Kalamagi says, wait for that 4 or 5 star setup and then come in there. I thought number 4 was interesting there. It's only sort of smaller name, but just because of the volume there, Chris, had pretty chunky there. It was probably too small for me personally, but just keep an eye on that just because it's had a pretty reasonable lot of stock in there. AIM, which is one of the other AI sort of stocks there, has had a pretty strong run there. Had a little bit of a consolidation in there, Chris. Not had that 1 day volume there, but not too much else. It's pretty tight in here. Has sort of tightened up here, so you're looking your half hourlies there for a little bit there. Sort of probably a little bit of a VCP in here. It's just
high tide flag potential, isn't it? Coming from like 35, 36, 38 cents, putting on 100%, consolidating in the top third of that rally range.
Yeah, you would have loved to have seen a bit more time in the consolidation. That's the only thing. I personally think if you get a bit more time in these consolidations, like you see that a few more days in there, then they tend to have a bit more meaningful. If they're too short, then the breakout can be short as well. So, but you still get a sharp move. You can definitely sort of see that. So, it has gone up. It's gone above the little B wave here. So, I mean, we saw. I don't say it's not as strong as LTP was, but when you had those, even that light consolidation, they can still sort of pop and run for a little bit. So, but yeah, it's getting that aim's probably just a little. I was going to say extended, but we know there's these stocks that show relative strength there, and they can, even though they look extended on our charts here, they can keep going as well. So definitely one that still looking pretty firm here. AIM, LRV. This is a bit messier there. This is probably kind of what I was sort of I guess what I'm talking about there was we did see a consolidation there, but I would have loved to have seen this go on a bit longer. So sometimes when they're too short like this, they can just pierce out, and then that can be short-lived. So they'll often get to new highs there, but they don't. Sometimes if they're too short, they don't go on with it. So that's the risk of sometimes there. That's why you want to sort of see a longer consolidation sometimes. You prefer to see more time there, because they can just be like, this could be like a 4th wave, and then you just get your 5th wave and it's done. So that's the risk sometimes. So we have seen. So there was a bit of selling there. So back to back days of selling there. So got the 1 day reversal there, but the next day as well that we bounced on light volume. So that's it's looking a little tired, that one. So not the ideal sort of setup there. Quite surprised by OPT here. We talked about this. I mean, did have that sort of chunky volume there early, come back and come back to the 50, and then it's pretty much hung with 20 all the way up here. So, when you could have basically, if you're clever there, you could have looked at the 50 there, or maybe breaking above that little swing high there, little B wave there. But yeah, it's been pretty strong here. Maybe this can, there's a good volume through here, Chris. So maybe we'll go back to the high here, and maybe set up a handle here. You might get a handle for a couple of months there or so. Yeah, just want to keep an eye on there. I think feel like a bit too late to be jumping in there. CYL, again, just another leader which has been pretty strong here. You had this little cup and handle, that congestion under the high there pops through. A few little consolidations in there, but really didn't sort of break any swing highs in there. So it's one thing you sort of see with these stocks with really strong momentum. They just keep. Even if you give yourself a bit more room, just use last low there, there's a stop there. They can just sort of keep running these things. So, see what else. Yeah, and there's still no. Yeah, I mean, just look at the last few days there. Still no selling going on there. So it's not showing any signs of weakness. That's still, if anything, that's actually between the last high and the low there, it's actually spacing in there. So it's still not showing any signs of weakness at all. What were you going to say this, sorry?
I was going to say it's similar to a lot of the companies you pulled out for the model books that we'll send out next week. Just it ends up ramping up, and you break it down a whole trend like that, but for years and years after each other. So that's kind of another. Maybe we can put an earmark on this one. If it keeps powering, we can add it to next year's model book.
Yeah. I mean, and it matches too with the 50 as well. Like if you look at some of those strongest names there, I know sometimes they do can and flutter and sort of just break the 50. But a lot of them sort of do, like strongest names, they do sort of hold above the 50. And like if you're not like a short-term trader there and you're more of an investor there, I'd still encourage you to use that 50-day moving average there, even if you're not trading harder there. If you are sort of trying to catch these sort of names with bigger moves there, when that 50-day moving average there, it's a nice sort of trail there. Gives you plenty of room there if you want to, if you're not sort of someone who wants to be so active. Does ensure you'll sort of catch the bigger names as well, stay with the trade a bit longer. But me first, I know sort of, O'Neill basically wouldn't own any stock that broke below the 50-day moving average. So, sort of one of the best portfolio managers of all time there. So, good enough for him. It's probably good enough for most of us. So, SMI, another pretty strong name, Chris, as well. So, again, we just keep seeing those little consolidations there for a few days there. Not much volume coming in and then just popping up. So, I guess
is that spacing again? Are those little congestions, is that giving spacing or not wide enough to really give valid spacing?
Yeah, no, so that's right. So there's your sort of high there. It goes through it, and then that's all of a sudden it consolidates there. So there's spacing there. So it's going to accelerate quickly. Even so, there it maybe sits on top of the high there. There's the high there. Maybe it sits on top. So not quite the spacing there, but still sitting on top of the high there. So you saw your spacing in there when it really gapped up and moved there. This means the trend's pretty strong here. So, yeah, I mean, even this is price bar here. That was a big move up there. A 1 day volume there, and then it just trickles off, and all of a sudden, bang, gone again. So, I mean, I know they're extended here, obviously, pretty much hugged the 10 here. So that's a pretty, So you want to be watching that 10-day moving average for SMI, just because that's. You look at late stage. Yeah. At least if you're a bit, longer inclined, to be using the 20 gives you a bit more room. But that's the beauty of sort of trying to trail here. So that's why the pros will trade some into 8 and then use the moving average there, whether it's the 10 or 20 to sort of track there. If you listen to enough of Kalamagi there, he talks about tracking the 20s there, but when these stocks have gone up, 50% or 80%, he'll often just sell some of them. He goes, I should have just followed I should follow my rules. So, but you're still getting that momentum there, sort of pushing it higher to there. So I know David Ryan is always sort of someone that, if they really are pushing on, he's always trying to take a little bit off, So if they get really heated there, he'll try and carry a position until the end, until it crosses a moving average there. Yeah. But he'll still sort of sell a little bit more into extreme heat there if it's really taken off there. EDH is just gapped up there. There's a stock. There's Nuix there, which we covered as well. So it's just kept going here. I mean, one interesting little tidbit there, Chris, is that in my studies of looking at like the big stocks, not so much these sort of momentum-based stocks, is that when you get to the end of the bull market, you can have, just say it's a 3 or 4 year bull market, the last leg up the bull market. So can often be 50% of the last range that can be the last leg up. So you can spend 4 years or 3 years or 2 years, however this trend is. But the last leg can be 50% of the entire move, and it can be really short, sharp in nature there. So what I'm trying to say is that the juiciest part of the move will come at the very end. And it's almost like, you think about a decline as well. It can spend months and months and months making lower high, lower high, lower high, lower high. and then
The washout.
the washout comes in the last few weeks, the last month. So it can be like a 1 year or 2 year decline. Last month or that can be where 50% of that decline can come in that last leg there. So the juiciest part of these moves there can really lay it on in the last month or two of the moves there. So that's why sort of get momentum building and going there. That's why the pros use these. They sell some of the heat, take the heat off the trade there, lock some profits in, but then they use that moving average to sort of try and capture the moves that they just don't know if it's going to be a 2 ATR or a 4 ATR or a 14 ATR or potentially a 40 ATR. You don't know how much these things can move here. So look how aggressive that move's been here. So since that, just talking about, this has been a stock which has been strong here for probably a couple of years now. I think coming out of that October 22 low here. So even like this little B-wave break here at 350, when was that? 16th of August. So we're not even, we're a month down the track here, and stocks up 80% in a month. So imagine, that's what I mean. You're seeing these stronger names there. The end of the move can be really, really big here, so it can move the needle. So imagine if you got to say 15, 20% holding there and got an 80% rally on say 20% of your capital in a month. So it moves the needle on your account. Just do the maths on that. It's I sort of studied all this momentum stuff for years, and then I couldn't work out how these guys were making these big returns, Chris. Like, how the hell is Minabani making this? How the hell is maybe Ryder? How's Sean? How are these guys making these big dollars there? But all of a sudden, you manage that. What happens is eventually you'll get a concentrated bet on. So within your rules there. So for me, it was I maxed 20%. So I got a 20% bet on a stock, and it ripped 30%. I think in about a week or two. And then all of a sudden, I saw what they did to my P&L and did to my account, and then it's like, whoa, geez, if you could get a few of those over the year,
difference to the year.
It just, it moves the needle there. So it's, so imagine getting a 20% move and getting an 80% run on that 20%. Yeah. So, that moves the needle on your account. That's a big, big move. That's more than a fund manager might get the whole year. So, but you can't, you can't get that if you're, trading, if you're just sort of having a 3-for-1 risk reward, and just capping out every time say you risk 10 cents or 20 cents and you make 60, you're out. But, you sort of, that's why you sort of, with these momentum names, you sort of, I think you got to track some of it, you got to sell some of the heat, just take the pressure off the trade and let the other half sort of run pretty hot there. So I've been trying to sort of take up the quarter to half off, and then let the other sort of halves run there, because you just never know which one's going to be the one that sort of moves there. So I think it's a pretty good lesson there.
I think you've reviewed some of the best traders in the past and seen interviews where they said, well, if it wasn't for these 6 trades of the year, I actually would have lost money for the whole year. But they put on 100, 150, 200 trades. And it was only a handful of trades that meant the difference between break even or a loss and stellar returns over 100% kind of thing. So
yeah, we were just talking earlier about, like one of the viewers that had a question about, he's mentioned that he'd been stopped out a few times. I think he mentioned the last 3 or 4 trades he got stopped out on, but then they reversed and went up. It's like, I think he was questioning why should I have stops, So, but that's, the trading is about the maths. So, we know if the stops at too wide, you take too big a loss, then it's hard to recover that, on the upside there. So it's really a numbers game, trading. It's really mathematics. If you sort of study whether it's Minabani's books or whether you're talking about Trade with Freedom. What's his name?
Ben Tharp, was it? Or
Ben Tharp, yeah. So he was
books.
Yeah, he covers it pretty heavy detail. Probably don't need to go to that sort of level with most traders there, but it's all math orientated there. You sort of, if you let sort of something slide there, if just say you had a 10 or a 15 or 20% position size on it, you let it slide more than 10 or 15%, usually when it stops. Because the last three before stopped you out, and then then it went back up again. If the next one doesn't sort of stop you out, ends up being a satire, and you lose 80% of your capital, what are you going to do? You're out of the game. So why you have stops is because you want to basically stay in the game for as long as possible here. What's Larry Hart say? If you don't bet, you can't win, and if you don't have capital, you can't bet. So the whole idea of stops is to maintain your capital. So if you retain 99% of your capital by having a stop that's no more than 1%, then you're still in the game. So it is a numbers game. You've got to have the stops in place there. I was just telling Chris, I listened to this. I haven't, Capital Traders hasn't sort of done so many good interviews recently, but the last trader who's just done an interview there was really, really interesting. And it was trying to replicate Richard Dennis's sort of like throw a dartboard at the
Dart of the dartboard for stock picking.
Yeah, for stock picking, pick a trade, and then just trade that based on randomness. So what his rationale was that it doesn't matter what trade you take, it's how you manage it, which is the important part. So this gentleman there in the Chapter Traders, he's basically, he basically sort of replicated that trade there, because Richard Dennis never published anything to do with that, but he just talked about it. But he's done 100 trades over the year. He's like a two ATR as a stop, and then I think once he gets to 4 ATR, he goes to +1. So he must sort of trail it, like a trailing ATR there. But yeah, he had 100. So basically all random. So basically, you Scrabble pieces to pick codes. He used Ouija boards to pick codes. He traded different. He was in different countries, not parts. He traded different markets. All he used was the 13 EMA to decide once he got the code. So if it's been going down for 13 days, he'll go short. If the 13-day EMA was pointing up, he'll go long. That was it. So very, very simple. So long story is still after 100 trades, I think 59 he was break even. By the 100, after the 100th trade there, the account was up 15%. So it turned 100K into 115. So
beats most fund managers.
Yeah, so it's all about it's the mass. It's managing the risk there. That's the key there. So I've been a broker for 20 years, and I've had lots of in the early years I've sort of had a lot of clients who just did their own thing. I just managed the trades and stuff there. And I had some really, really smart clients who just couldn't comprehend being wrong. And I had some clients there who were pretty novices and didn't know much, but they just had risk management rules there. And as soon as they were wrong, they were out. And I remember like having, two guys are at opposite ends of the spectrum in terms of experience there, but one just couldn't handle. He didn't have the went against him. He didn't know what to do. He thought he was right, so he got to stay with it. Whereas the other traders, less experienced, just basically as soon as he $500 against him, he was straight out, just closing out. Very disciplined there, very inexperienced trader. He did much better than the guy who's been trading for 8-10 years, but just couldn't handle the being wrong there. So that's the essence of trading, is that the reason you have stops is that you've got to get comfortable being a loser, because the best traders on the planet actually have very high loss ratios. They basically they take home a lot of losers. I mean, Galamaghi, who's potentially one of the best traders profitability wise, is has got I think his win rate's around 30%. In some years it's been less than, he's actually proven to be less than 30% right. But when he's right, he's catching them. He's catching these 100, 200% moves, and it's those sort of, if you manage to sort of you capture those, say, 3 or 4 big, 50%, 80%, 100% moves in a year on say 20% of your capital, 10% of your capital, that's what moves the needle in the day. So that's what we're trying to stay in the game here, but we have to sort of try and capture those big moves as well.
It's definitely the way to do it. It's preserve that capital, and some traders call it their lifeblood. They don't have the capital, they don't have the lifeblood. You can't trade.
Yeah. I was trying to find. I found Linda Raschke's sort of trading rules there, because I thought it was a good question there on the website. I was trying to sort of come up with a good answer there, but one thing sort of Linda mentioned there was that losses make the trader studious, not profits. Take advantage of every loss to improve your knowledge of market action. So it sounds funny, you're going to learn more from those losses there. I think I sort of replied, first thing I would do is actually go back and review all those trades that you got stopped out. So there's potentially maybe your stop is too tight, but maybe it could be looser, but might be the opposite. You go back and look at if I stop was maybe I'm going to stop that anyway. If I was tighter, my stop would be less. I could always come back and trade again, just set up again. But then my win might be sort of big greater as well. So
you reminded me of some advice I was given in my probably first month of trading. I was 18, working at dealers, a stockbroking office, and there was another gentleman at the other end of his career, and this was 2004, 2005, 2006. So commodities were just rearing hot. ASX was outperforming the US, running rings around it. Said to me, well, yeah, you might make a lot of money in bull markets, but you're not going to learn much. I looked at him kind of confused and thought, I'm learning so much right now. No, you're earning, but you'll learn in a bear market. You won't earn in a bear market, but you will learn a lot. And it was pretty much the same thing. You got to learn what it's like to be wrong. And when you're wrong, that's when you look back over your trades and you really reflect and you learn as a trader. So his point was, you've got to lose a lot to really learn how to do this well and do it properly and do it for a whole career, which he had. So
yeah, I know, sort of having worked with a lot of stockbrokers over the years, that brokers who started in the middle of the bear market usually went on, had a pretty good career. Whereas brokers that started in the middle of the rampant bull market, they didn't have such a good career. Yeah, so it's weird. That's so true. EIQ number 16 there. This is a bit small here, this one, Chris, but do have some pretty chunky volume there. Has had a bit of a impulsive move here in the last few weeks there. So I just put one to sort of keep on the radar, just because it has had some momentum there. CHN, I thought was interesting there, just because we've sort of broken above a couple of swing highs here, and we do have a bit of a move in volume. I know this is a stock that's got lots of losers in front of it, so it's going to be a bit of a battle to get ahead here. But we do have a change of character in the stock there. We've definitely seen a couple of swing highs broken out. Definitely seems a big volume here, so it does have a bit of a change in character in stock. So can move fast, this stock here, even though it's going to have a lot of sellers that will probably be selling into the heat here. It can leave a reasonable percentage. So probably just one to keep an eye on there as well, just because it has changed there. Number 19 there. We'll put that little cup and handle there.
It's handle there. Consolidation at the high. That's its coil.
Yeah, I did sort of see this little tight action there. I thought it looked quite good there, but it should go on with it. You know what I mean? So I think if you sort of see this 1, 2, 3 days hasn't sort of gone on after that little tight there, then there's something. You know what I mean? Like, you see that, if you see this little 3-4 day tightness and this tightness there, it usually sort of comes out of that. If because see here, it's tightened up here and come out, and then tightened up and come out here. This is tightened up here, and after 3 days it hasn't come out, so something's wrong. You know what I mean? So that's just something just to be mindful of there. If it doesn't do what it should do, then there's something wrong with the trade there. So
as you say that, I'm looking through mid-July at a similar thing. There were 8 days from mid to late July where it consolidated and then dropped out for 4 or 5 days. And same as late May, it was kind of 2, 4, 6, 7 days where it consolidated tight compression and then dropped out into the start of June. So yeah, it could be behavior of this company. We'll see.
Yeah, there's no volume there yet, but yeah, it's still going to be sort of watching it closely there. Nice LTPs back on the list there. So yeah, watching this one now, sort of did manage to sort of capture this one on the way up here. But I just noticed that when they sort of do come off like this, a little 3 wave there, you want to sort of see it consolidate, and then break a B wave there. So I'm sort of still watching this one here. I still think it might be a bit more work to do. because I do quite like this prospect here longer term, but it might need to do a bit more work there first. FBR, this is the fast break there. This is the, I know, so heading over to the
States.
Yeah, gone to the US, sort of rolled it out there. So yeah, a little bit of a VCP. Now I did sort of see this there. If it was above 30 cents there, I might have traded this one, but sort of a smaller stock here, so a bit hard to trade it. Has moved up a little bit. But again, it's one of those stocks there. There's a lot of losers in front of this stock. It's been in a downtrend for quite some time here. So it's going to be a bit of a battle for this stock. Yeah, a lot of shares on issue as well now. Have to sort of keep down the market, tapping the market for capital. OBM's been pretty strong here, Chris. That's sort of one that's been on the list for a while here. Nice little tight consolidation in there recently. Again, sort of, it looked like there might have been a little bit of volume in there, but the volume buying came straight back there, and there's a little dip there. See, the last couple of days it sort of sold off, just congested under the high there and no volume there. So that was a little bit of a tell there. That I wasn't going to go on with it there. Like, we had 2 days there consolidating, no volume. Then the first day up, we got big volume again. So had a nice run here, this one. So still looking kind of firm. What have we got there? ASB, bit of a game changer trade here. Did sort of gap up after some good news there. Big volume as well. Has managed to sort of go on there. So this is a trade I sort of had a bit on, so I didn't sort of see this until the end of the day. But might have been one of those stocks there if you could buy this sort of game changing news there. I think Ivan Hoff there has the low on the first half hour, so just keep a stop in there sort of somewhere there. But it has gone on with it there. And the last one there, REG, which has been running for a while here now, and had those little tight, so see how this, stayed tight here and then just come out, bang, stayed tight here and then come out. So, might be looking a little bit long in the tooth there, but they can always keep going, these stocks here. So, that's our quality momentum. Let's see, Chris, just some strong names that are still been on the list for weeks and weeks and weeks, just sort of keep powering there. Have those little consolidations there. So I mean, in terms of trading those, ideally what you want to see is, those stronger names, they have a strong run, but then you want to wait for a little tight consolidation. The tighter that, the longer and the tighter that consolidation gets, the better, because then you can sort of like use a tight low one, because therefore you sort of know that you're not risking much. So I took a trade the other day, which is it was a VCP, Chris, but it wasn't. It was below the 50, which I don't particularly like, but I really like this company. It was a bit of a strategic play for me. But what I liked about it was that it just tightened up, and it got really, really tight. I thought, wow, literally, I'm risking 4 cents. It comes out of here, this could run 40 cents easy. So, and I just waited for the first little B wave break in there. But I knew I was just risking very little. So it was, even though it sort of probably wasn't sort of 7 out of 7 for me, it was a trade that I really liked. I thought my timing was good. But the risk was so small on it as well. So, as it was, it flew. It came out of that consolidation. Now, obviously, everyone saw how tight it was. As soon as it started breaking out, I started coming in. But I didn't get the full weight of that trade on. It sort of moved pretty quickly. But I did get a starter. I got sort of half of a second position on. But, it's just about sort of managing that risk for me as well. So, ideally that, even those really, really strong names there, I think, like, you think about that Nuix, that's been one of the strongest names on there. Even though this has had a strong move here, it's got vertical, you think, oh, this is gone too hard. But then the whole thing just tightens up here. So, but really, 494 there's a bit of a cap there. But then what do you got down the bottom side here? 469 here. So you maybe got 30 cents there or something, maybe of risk in here. So you tightened up in here, maybe you use, if you come in 475 here, and then so maybe if you entered there at maybe 495, 496, you probably want to see it over like 475. So maybe you're at 474, so you're only risking say 20 cents. So your risk is pretty tight there. and then you're looking to make at least 3 times that. If you think this maybe can run 3 times that, then you're going to trade there. For me personally, but it just goes to show you still keep an eye on those strongest names. If they have that tight consolidation, that's ideally what you're looking for. I mean, whereas the app on there hasn't really given you too many sort of low risk entries there. They're all been pretty high. I mean, I think this might have been the best entry here coming out of this little 1-2 consolidation there. Maybe buying that there with maybe your stop back here. That's probably the lowest risk entry there. But yeah, that's why we don't just trade everything. You're going to trade your rules, you're going to trade your book there, and yeah.
Well, they're definitely the rules and the ways to take the momentum leaders, which you've studied quite extensively. And again, those videos will come out next week. So we've looked at the momentum leaders, which we do see those monster stocks and those rallies, and you've already picked out 3 names that have just been in that list for a long time. Before they become those momentum leaders, there's that breeding ground where they sort of come and show up before in the launch pad. Now, sort of one of 2 things. They can be a previous leader, like you've said, and then they just come back into the launch pad after a period of consolidation and get going again. Or they can be that reversal that you flagged could be happening in the materials in the last couple of weeks, and particularly last Friday's video looking at the launch pad and seeing a lot of materials or minerals and miners in there. And just looking at the launch pad themes this week, we can see if we look at, so Gary gets exposure to the top 200 as well. We share with the 30-30 list of members at 30 beach. And in that, so we were talking about it before, there's gold producers.
Coal. Coal, there. It's a gold and coal. What was it, the third one?
The large cap miners, so those that are actually producing mineral output. So there's sort of a slicing of that. But yeah, gold, 9 uranium companies in there, 16 American miners. Their met coal was in there, and nickel, iron ore, copper, nat gas. So a fair few in that space. And this is kind of what you were talking about last week, isn't it? You didn't just want the flash in the pan to show up in the launch pad. Materials miners, those producing mineral output.
No, yeah. And it's a good sign, Chris, that the big caps are in there as well, because we sort of know, like you think about bottom of a bear market normally, the big caps tend to sort of pop first, and then once they run a bit more, then the risk tends to sort of filter down so that the mid caps run later on, and then at the end of the move, the small caps sort of join the party. So it's actually good that obviously resources are coming pretty heavy. So it's a good sign that the big caps are actually getting a little bit of weight behind them as well, because that's what you want to see. That's where institutional money will go. It won't go to the small caps. It'll go into those bigger names there. So we are going to see a bigger move. It's a bigger bounce there. We should see them moving first. But also the sectors as well, which sectors, so obviously uranium was one of the ones that did line up. Well, it's 2 weeks in a row in it, so that's a good sign for that sector. I mean, gold's been in and out of lists the whole time here, so so it's been pretty buoyant there. It's a weird one, gold. There's been so many. I've missed a couple of trades in there, but it's also been a bit disappointing considering how strong gold is. And it probably went better just trading the gold ETF, which I hate trading ETFs, but that would have been a better trade there. But some of the names they've all started at a different time. That's the amazing thing there. Whereas I think that uranium sector tends to sort of, from what we've seen last year or in the last sort of 12 to 18 months, is they all tend to light up together. They all sort of run all at the same time there. So yeah.
They turn hot and cold together. So when you're delving into the list this week, obviously there's those overarching themes that you're seeing. If you're drilling down to the individual charts, which ones are coming out to be of interest to you and get on your watch list?
Yeah, I saw STX there, Strike Energy was sort of a smaller one there. Had a bit of a bounce there, sort of off a bit of a low there. But I mean, we talked about ASB having that game changer trade there. It's had a big run already. So again, unless you sort of saw that news and then traded that gap up there, a bit hard there. SB2 was sort of one that I was sort of watching there. There was a little bit of a cup in hand, a little bit of a BCP in there previously. Just, it is above the 30 cent mark, so it does make my rules there. But I did look at this last week, Chris. I was looking at this but I found it was not the most liquid stock there. There wasn't a lot of stock sort of in the screen, sort of like bit it off of there. So yeah, so I thought, oh, you know, we're be one of those things. If you're going to trade it there, you'd be trading it pretty small. So me personally, I've got some liquidity rules that I like to follow. So although I like the chart there, it just didn't fit my criteria. CSC was an interesting one there. Chris must be a sort of new name. It's sort of stayed sort of nice and tight here. I think it's not an ETF. I think it's a sort of fund or something. I think it is. But I thought that was sort of one just to keep an eye on there. AV1 was sort of rather little, possible little cup here, sort of a bit of a B-wave break there. Again, not very liquid. Seen a bit of a chunky volume on the right-hand side here, but, very, very lightly traded there. So, again, hard to trade personally, so not for me. Just the CHN I noticed was on the list there. Definitely got this just on my radar now, just because it has had that pretty decent move. And I saw PRU, I just noticed there's a little bit of a VCP in there at the moment. It's had that, first leg down, second one here. So I'm just looking to see if this tightens up again. I just noticed a few of these. We're seeing here, tightened up in here and then popped, and it tightened up in here and then popped. So it does tend to sort of do this. We're seeing some of the bigger names have a few VCPs. I was telling you earlier there, some of the VCPs that I've traded there, some of the bigger names, and they've done quite well actually. So what else is in there? So deep yellow was one we talked about. They had that false break. Did go back up to last swing high here. Then it sort of did congest there. Sort of saw that there's some good volume off the low here. Had 1 or 2 or 3 days down here. Not too much selling came in there. And then we saw it pop to a near high here. So look, you do have a little bit of a B-wave break here. Would have loved to have seen this tighten up a bit more. But we know these names, there's sometimes they don't sort of give you that easy trade. There's sometimes they can just sort of turn up and get going again. Thought that looked right. SGM was sort of one that I was really looking at there. Just because the weekly, I thought the weekly looked pretty good actually. I think I had this on my report there. Just because it had sort of popped out pretty good volume there, congested and then tightened up here. There was a bit of a VCP there on the daily. I did notice this. It's sort of me breaking above that 1121. There's a little bit of a B-wave break. Had a little bit of a throwback there, but no volume, and then report next day. Sort of been a bit risky coming out of the report, but I thought this looked quite good there. There was some early signs there that this was quite good. And then again, you're breaking up here, Chris, and come back retest at 50, and then you're coiling up under the high here. It's just classic sort of stuff here. So I thought that looked really good. What else was there? SEC. Emerging companies list there. Just thought that was sort of stayed nice and tight there. So probably indicative, probably good for the market there, seeing actually some of those emerging companies staying, had a pretty good run and then staying pretty tight there. So that's a bit of a basket of sort of stocks there. LRS. Well, this is pretty interesting there. This stock is sort of gapped up there. Some pretty big volume in here. Has pulled back there, lightened off there. Had the rally again. And then it stayed pretty tight here again. So got a bit of a VCP sort of popping in there. So I did sort of circle that one just to keep an eye on there. I wouldn't mind sort of finding out what I have to go back and read it, go back and read up on what the stock is, sort of what the reason was for the gap up there. But one I'd definitely have a closer look at. 29M, I thought this was pretty interesting as well, just because has sort of broken above a little bit of a swing high now after being pretty, it's been in a bit of a downtrend here for a bit. So I know a lot of people talking about sort of copper market there. It's had a few issues. 29M, it was sort of with the rains and stuff there, mine closures there. So potentially sort of could recover there. So it's just one to keep an eye on there. MLX, thought this one was, again, pretty strong stock overall. Kind of had, this is a big correction here, big ABC. It's sort of gone sideways for a while. Just come out of a bit of a B-wave there. The volume's okay without being super, I guess. So the volume was okay through here. pullback sort of tightened up in here, has sort of gone through this big wave here around 42. So I thought this looked okay here. Yeah, not too bad. I like the fact it's impulsive into that high, and this is a bit of a corrective decline here. So it's got the potential to sort of come out of that that sort of sideways move. So I thought that looked not too bad. That RL, again, it's had a pretty deep pullback. It's come back here, sort of gone on with it here. It's pretty good volume through here, Chris, as well. So pretty nice volume on this rally. Pull back here, some good volume again here, and stayed pretty tight here. Nothing, I can't say they're negative in this at the moment. Looks still pretty positive to me. Last one on there was AIS. I like the look of this actually, Chris. It's had a good move here. So we've gone from 9 cents up to 35 here. So we've definitely gone 300 or 400%. So a pretty decent move. It's come back. Probably we'd love to have seen it maybe only come back half the range, just come back just slightly beyond the half mark. So probably would have been nice to stay a bit higher in the range there. But we're starting to see volume sort of come in again here. So definitely sort of one for me to go and have a closer look at there, just maybe read up on. But I do like the fact that there was some good volume through here. And this is much lighter on a pullback through here as well. So yeah, we might potentially have another leg here. So I just thought this one looked pretty interesting there. So definitely earmark that.
That was one of the requested ones as well. And I think you've covered most of them. I think it was just STP might have been the only one that was requested and you hadn't covered. So any thoughts on STP?
Yeah, like I thought it still just hasn't shown much weakness, Chris. It's been one of those sort of perennial leaders in there. Did have a reasonable sort of pullback in there, but sometimes you see these downtrends, you think, oh, it's come back under the 50, looks a bit negative there. But if you go back and look in context there, it's had a pretty strong move there. That decline is pretty small compared to the move there. So it stayed in, you're up in the sort of, well, you're definitely in the top half. You might even be on the top third or in the top quarter there. So it hasn't shown that much weakness there. So we know
handle potential on the week as well.
Yeah, we know when they've been this strong here for a long time here that these are the ones that can push on there. So there's a bit of volume up around here, which is unusual. Like it's sort of normally you'd like to see the volume driving through here and then maybe dry up on the consolidation, but up around here, it was a bit chunky around here. So what was this accumulation of distribution? So that always makes me a little nervous when I see heavier days there. So it did start to fade off here. But I haven't seen it, so it'll be interesting to sort of see what I can do around the high here. But just that's the only thing I don't like is just that sort of, to me, that's signs of distribution through there. Because like a lot of those stronger names, they sort of go up here, they get the drive there, and they start to peel off, and then you just see no volume in it. And then they weaken off here with pretty light volume. The only good thing is that the last few days we've seen a bit of volume come back in. Yes, that's kind of positive. So yeah, interesting here. But it doesn't look too bad. It's obviously the trend's your friend. It's been on the right side here. So if there's any risk here, the risk is it's going to pop to the top side. Just not perfect looking with that choppiness at the top there. But I thought looked pretty good here. There's a bit going in the market there. Obviously, we've had 50 basis points from the States. They're pretty good. So that's obviously, that's made the US market been pretty strong here. S&P 500 sort of gone to a new high here as well. So I always get a little nervous coming into the equinox. Can be a little bit of a, it can be. Even if it's not a turning point, it can be a pivot point. So it can be like a 3 or 4 day pivot point sometimes, even if it's not. So look, the market's still pretty buoyant. I think interest rate cut is unless we start getting some really bad economic data and sort of recessionary type sort of slowdown sort of stuff there. I think with the 50 basis points there, it's going to be good for equities. So so still looks pretty positive there, but. Yeah, but it's nice around the equinox, so you can get a little, you might get, like maybe we go up again tonight into the equinox in the States there, and then maybe you get like a 3 or 4 day ingestion. It's like, sort of like maybe 3 or 4 days down. And then we continue on something like that. That probably would be how I'd sort of suggest it here. But it's still pretty, end of the day, it's sort of just, I think, just got to trade it, trade your setup. See, we don't know, when that big streak's coming. You don't know if your sector's going to have, do something different, as well compared to everything else. So, definitely feels very sector based. A lot of the rallies at the moment. So, that's why I think that following your report is really important as well, because it's sort of like you want to be basically sort of identifying the strong stocks, but also the strong stocks in the strong sort of sectors as well, and that'll add to returns. I know sort of Stan Weinstein talks about the stronger themes, things like the market. So I think by identifying which sectors are looking the strongest there and showing the relative strength, that's when you can sort of get the moves there. Where we saw it was such a boring sector like property trusts in the last 2 months there. So I mean they've gone to have some ripping moves there. I mean CHC is ripped out, beautiful VCP here around 1250. I mean GOZ, I did trade this one. This one had gone a bit further than I thought. I mean it came out of here, little VCP out of here and just ripped. So I wasn't expecting it to run this hot. I took my profits a little bit too early there. But it's been a few other trades around, so can't complain.
That's definitely a good indication when you identified then, and you can see this rally now, which is normally a boring part of the market. I remember dismissing it, thinking, I've seen this before. Quite often it's only an 8-12% rally. Is that enough for my capital? I've got better places to allocate it. But as you pointed out, look, there's a stellar run, and it did exactly what you're looking for. It lit up the launch pad for a few consecutive weeks, and you've seen that in this week's report with some of the miners. So we'll look back to see if that continues. And that's, I guess, we say thank you to members because they're supporting us with that. They're giving us the feedback. They're in a conversation about what we're doing, and they're also suggesting charts for discussion in today's, because they're getting the report when Gary does on Thursday. This video comes out Friday after market. And it's a good point to say next week, there's been a lot of research gone into this, a lot of time. Gary's dissected the charts to the nth degree for some of the best companies on the market over the last couple of years and put together the model book. So we'll share those 2 videos next week. And it's a lot of what you've been talking about, Gary, is just how much you've observed these market leaders consistently doing the same patterns, the same setups, the same behavior, and your reflection upon the consolidation there. So any summary you want to share with us without giving it away, because they are quite extensive videos, a lot of heart and soul and research into it.
Yeah.
Any summary you want to put for that?
No, but I mean, the only thing I'd sort of say is that probably 2/3 of the stocks that we covered in Model Book, they've continued to keep going higher. So even though they've already had these monster moves already, they've kept going. So it's it's amazing now. I actually read I did read so
while Gary looks that up, just the model book, like we've looked at Nuix and a couple of companies today, and they're those stellar runs, but they've just kept going. You can understand looking back. So we were copying what William O'Neill was doing back 70s, 80s, 90s, looking at the best companies of that time and dissecting it, because he would use a leading theme, quite often a new novel technology, find the leader in that group, run some fundamental filters for his cancelling method, find a cup and handle, and get long all the way through until the 50-day tipped in out, and possibly reload at the next congestion, which Gary's talked a lot about today. So filling that for you, what chestnut have you got for us that you've looked up?
No, it was a pretty wet and cold weekend last week in Melbourne there. So I ended up reading Livermore's book, which I thought was, obviously, it was written, obviously, obviously he traded the 29 market, so it's written a long time ago. So it's a terrific book. There's so many good gems in that book there. But he was ahead of his time there. Really, he's talking about trading the leaders, basically. Sort of like he had a really strong interest in trading leaders. That was he sort of confined your studies of stock market movements to the prominent issues of the day, the leaders. It is where the action is. If you can't make money out of the leader, active issues, you're not going to make money out of the stock market. He also believed that sort of timing should never be dictated by high prices. High prices were never a timing signal to sell a stock, Livermore said. Just because the stock's at a high price doesn't mean it won't go higher. And he was also just as comfortable on the short side as again, just because the stock has fallen in price doesn't mean that it won't go lower. I never buy a stock on declines, and I never short stock on rallies. So, he's talking about that momentum as well. So leading names, stuff there. It's just, there's just so many good gems in that book. I was just highlighting sections and getting quotes. It's just like, and it's to think here. There's a guy that was made a lot of money, made a fortune that time. I know he had personal issues, but his ability to trade and make a lot of money fast was probably unparalleled time. If you look at what he was looking at, it all matches up with what the best traders are doing today. They're doing exactly the same thing, just obviously probably a lot more refined now. They're all the same lessons were all there. It's no mistake here that some of the O'Neills and Minibenis that I've read Livermore's book as well, but it's just it's all the same stuff. All the same stuff.
Well, that's exactly it. And that's what sort of the turning point was. William O'Neill, Weinstein, Jessie Livermore reading their books and going, hang on a second, they made money over different decades and over a century. Where are the tools for the ASX? We don't have them. That's what Gary and I are consistently talking about. Let's just build them ourselves. So that's the model book for next week. And we've got Gary to thank for doing the hard yards. I'm doing all the heavy lifting and researching that. To that end, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.